let's get started. Before we get into things, I like to read the proper disclaimer. The purpose of this presentation is for informational and educational purposes only and should not be construed as a recommendation to purchase or sell any security. MicroCap Club is not a registered investment advisor. MicroCap Club, its partners, members, subscribers, affiliates may or may not hold positions in one or more of the securities mentioned on this program and may trade in such securities at any time. Do your own due diligence and seek counsel from a registered investment advisor before trading in any security. I want to thank the MicroCap Club Community for tuning into this Business Breakdowns conversation with Randolph Pinna, the founder and CEO of Currency Exchange International. My tag team partner today for this Business Breakdowns is Adam Wilk. Adam is the portfolio manager and founder of Greystone Capital Management. Adam has been a member of MicroCap Club since 2017. If you're interested in learning more about Adam, we'll put a link to an interview we did with him recently in the show notes, as well as a link to his firm. Adam, it's an honor to have you on the program today. Welcome.
Thanks, appreciate it. Excited to do this one.
Awesome. Well, the business we're breaking down today is Currency Exchange International, which trades on the Toronto Stock Exchange under the symbol CXI. It also trades on the OTC markets under the symbol CURN. CXI was originally profiled on MicroCap Club back in 2014 by John Gay. And just a quick overview of the business, real quick. Currency Exchange International is a provider of foreign currency exchange services throughout the US, Canada, and select countries around the world. Through their Banknotes and Payments segments, CXI also provides international payments, foreign check clearing, and issuance of foreign currency bank drafts. CXI is one of only 3 major suppliers of foreign banknotes in the United States and of US dollar banknotes internationally. The company intends to tactfully use this advantage to gain market share and produce increased cash flows as it scales. The company is led by its founder, CEO Randolph Pinna, who owns 21% of the company. Randolph, thanks for joining us today.
Thank you, Ian. Nice to be here. Pleasure.
Yeah, it's an honor to have you. Before we get into the presentation itself, what you've been in and around the industry. I mean, before we started this conversation, it sounds like you've been dealing with currencies ever since you were in kindergarten. But it seems like you've been around the industry for a long time. Can you talk a little bit about your background and what led you to lead CXI?
Thank you for the introduction. Yes, I have been around foreign currency my entire life because my father is a medical doctor from Italy. My mother was a nurse in Austria, and they met and migrated here. And I was raised mostly in Florida, but traveled every year back overseas. When I was in my teenage years, there was a company that was created called Foreign Currency Exchange Incorporated, FCE, and that business became a publicly traded company also in Toronto. And I actually took control of that literally right out of high school when I was just turning 18 years old. And that business was pretty much the same as this business, where it specialized in doing foreign banknotes currency exchange. And it was successful. When it had the IPO in Canada the first time, it had went up until the Twin Towers came down. And when the Twin Towers came down, our stock price came down. It didn't even go under the IPO price. So it wasn't that I had too many disgruntled shareholders, but Bank of Ireland from Dublin, Ireland, actually came over and said, this company's undervalued, we want to buy it. And we said, sorry, we're not for sale, because I own 26%. And my father, who helped start that company, owned 26%, and the rest was on the market. And so we refused to sell out to them. But word got to the largest currency exchange called Travelex. They're the global leader, or were, pre-pandemic. And they made a bigger offer to buy us. And then the Irish updated their offer, and they found a weak spot and gave me oysters and beer and more money, and we ended up agreeing to merge with Bank of Ireland Group. And so I was leading for Bank of Ireland their foreign currency business all in North America. and sat on the U.S. Supervisory Committee. And so I became a banker during that time. And then when the Euro crisis came, you remember the pigs of Europe, Portugal, Ireland, Greece, and Spain were bringing down the Euro. My boss wanted to shut down what CXI was called the non-bank unit. We had our core business was servicing banks, and our non-bank unit was servicing shopping malls, where we had locations in big shopping malls like Sawgrass Mills Mall in Fort Lauderdale. And they wanted to get out of that business because it wasn't making enough money. And I used that as the opportunity to buy back the non-bank unit, which is the roots of CXI. So I broke away from Bank of Ireland October 17th, 2007, and 36 employees plus myself went our own way. And I did have a 3-year non-compete, but we went ahead and developed the best software there was for currency exchange. I did have software the first time. That was one of the first online web-based foreign currency processing systems built back in 1988. We redesigned the software to be even better, more compliant, listening to regulators, listening to the old customers that I wasn't allowed to talk to yet, and listening to employees, and we developed the best system. When the non-compete came off, we did go ahead and get very focused on servicing banks across the country, and then eventually now across the world. And so I've been doing currency exchange and banking my entire career. So I'm not sure if that was more than you wanted to hear, but that's my experience with foreign currency.
Yeah, that was a great background. And why don't we jump into the presentation? And before you start, Randolph, I just want to remind the attendees, if they have a question at any point in time, just click the Q&A button on the bottom of your Zoom screen and enter them there. And we'll wait to answer them until after the presentation. But feel free, if you have a question, click that Q&A button, enter them there, and we'll get to them at the end of the presentation. But go ahead and start into the presentation, Randolph. Feel free to jump around if you want to as well. We try.
Thank you. Yes, I'm not the best page flipper, but we did organize this to give investors an understanding of what we do, who we are, and then some history on the numbers. I think I'm going to skip most of those numbers. We'll put this, if it's not already on our website, but we'll put it under our investor tab on our website so you can get more information from us. But basically, what the high level is that we have an experienced team, as you heard from my little intro. I've been doing this my entire career. My COO and my head of the consumer unit, most of my top executives all worked with me for over 20 years, which indicates that they were with me prior to CXI. And they were part of my old company, which was part of the Bank of Ireland group. We're very strong. If you look at our balance sheet, you will see that even after the pandemic, we came out strong because we had not been paying dividends to the shareholders. We have been keeping the retained earnings and using that to grow our business, and we're continuing to do so. As you said, I own 21% of the company and growing because we've currently been active in the buyback market, buying back stock as we feel that our stock is still undervalued, and it's a good use of part of our positive cash flow. We are a very profitable company, and we feel a certain part of that revenue and profit should be used to buying assets like another business or even our own business, and that's what we're doing. Our board owns shares. Our money comes from our core business of banknotes. So banknotes represent over 70% of the revenues for both CXI and its wholly owned subsidiary Exchange Bank of Canada. But we have diversified over the last 5 years into doing payments, which is checks and wire transfers, both spot and forward, which means you can buy a position today, but send the money in a month or 2 months. That's called a forward. And so we make our money in the FX, in the exchange rate between what I give the customer and what I can get for it, or vice versa. If they want me to send a payment, I buy it and sell it, and we make a spread. And we do get fee income both in our consumer unit, which is our retail stores, as well as for doing a wire fee and certain transaction fees we'll charge. We are very well funded to grow. We have a over $40 million line of credit. We're barely using it just because of weekends and stuff. Sometimes we go in and out of our lines, but we are positioned for future growth. Again, I was just recapping here the services. Cash, we do over 90 currencies. We do both domestic US dollar to US for a fee, or we'll do FX spot and forward transactions to make a spread. And we do clear foreign checks. We get, as you can imagine, being a Florida-based company and operating all over the US, we get a lot of Canadian items or pound checks, and we clear those through a digital cash ledger where you scan it and clear it electronically in Canada. Our key reason customers use us and switch to us is number one is software. In summary, the three reasons why they leave the big banks like Bank of America or Wells Fargo to a smaller specialist like that is because of software, because of the exchange rates are competitive, but we don't want to have a race to the bottom on rates. So we're competitive in exchange rates. And then, of course, that's our core business is service. Is basically this is all we do, so we do it very well, as opposed to the big banks just have a department that does that. And I told you again who our customers are, mostly banks, corporations, selectively, and then we do operate a consumer unit that has our own stores. We don't do that in Canada. We only have company-owned stores in the US, and they're in large shopping malls. I think, Adam, you said you were from Philadelphia, and there's a big mall there that we just opened up. And so we will continue to selectively open high volume tourist areas where there's locals or foreigners coming in, and but we have a rule: we don't pay top dollar rent. We won't be in a Haagen-Dazs booth in central Manhattan because it's too expensive. So we do go for select locations that work. We do have an online store that now is licensed to sell to I think 42 US states, which represents 90% of the US population, and we are allowed to deliver foreign currency to people's homes. And then we have a very successful agent division. We have several hundred locations of agents, namely airports like JFK, Newark, Chicago, Charlotte, etc., where we're not paying rent. The local operator's paying the rent and the payroll, and we do a revenue share of the foreign currency income there, and it's been very successful for us. We have a great team of people, as I was telling you. We like me, Wade, Matt, Chris Johnson, Katuna, and Paul have all worked together close to 20 years, some of them even more. Gerard Bernard is relatively new. He's our new group CFO, a very seasoned, experienced group CFO. Very happy to have him on board. We have a great board of directors. I invite you to check them out. Chirag, our chairman of the group, is a very successful businessman as well as a banker. He runs his own bank. Chitwan, same. And so we have a great board and great management team. And of course, in our business of banking, compliance and risk is critical. And so we have a very strong team of people in compliance and risk. Here's a timeline. I kind of already illustrated it. I did this purchase, these transactions. We went public, and then we've acquired a business. We've opened an exchange Bank of Canada, did another acquisition, got approval by the Federal Reserve to be one of 3 banks to distribute dollars globally. And that's a very unique contract. It's kind of odd to say here in Canada, all the big banks use other banks. And so the largest Bank of Canada would use a Bank of America. And we are starting to win more business like that. And we're now doing integrations for the payment side. Here's a chart of our stock price. You can run your own charts. The main thing I like to show here is that we probably are one of the only companies publicly traded here in Canada that has that little shares outstanding. And again, I own 1.3 something shares. And so it is a tight stock. And the reason is because we're not out issuing shares unless there's a real strategic reason to do it. Some shares that do get issued are because of options to the employees and directors. But we have a very good spread on who owns the stock. Management owns 28%. 50% are funds. Like Ian's fund Adam's fund. And then we do have some retail owners as well. This graph highlights why we're good, about us. Our software is critical, our home delivery. We have a very strong compliance unit. This is one of our best things about our software. We have a well-developed, what we call CVS, Compliance Verification System core. Everything operates around the customer, and hence we check live lists. The system checks live lists, 21 different lists, to ensure that our clients and us never are trading with someone, a bad person. And again, we have our bank, which enables us to get interbank pricing, bank to bank, and enables us to do business with central banks. As I told you, this is a little out of date. We're now up to 42 states that we operate our money transmitter license, which allows us to deliver to over 90% of the US population. We are focused on our integrations to other bank systems like Fiserv and Jack Henry, allowing us to go have this one OPOP, as we call it, one provider, us, and their one platform, theirs, because we've integrated together. Who are our competitors? This is the landscape. So Travelex used to be the world's largest currency exchange. They went belly up during the pandemic. That was a big reason why we had the record 2022 growth from pre-pandemic, is we were able to capture a good bit of their market share. We were the #2 non-bank foreign currency provider in the US, Travelex being one. They fell down and they exited. They did get recapitalized, so you'll still see the brand over in Europe and in select countries in Asia, but they have exited all of Canada, US, Mexico, the islands, everything. And HSBC also made a conscious decision to exit North America. Bank of Ireland, same thing, exited North America. And so here in the States, who do we compete against? It's just these other two providers, Bank of America and Wells Fargo. I wanted to let you know that Wells Fargo, interestingly enough, was the bank that bought the rest of that business from Bank of Ireland. If you recall from my earlier comments, we were partly owned by, we were a group under the Bank of Ireland. And when I bought the piece out, that was the non-bank unit, which was the stores, the malls. They kept the rest of the business, their core bank-to-bank business, but then ended up exiting completely from North America and selling that business to Wells Fargo. And interestingly enough, that business is still based in Orlando, Florida, where I had had it prior to, when we were part of Bank of Ireland Group. And so CXI and Wells Fargo both compete head-to-head in Orlando as our two headquarters. B of A, of course, is a global bank group that we compete with everywhere. In Canada, we are the only other provider to Bank of America on the scale of what we have. So if you come to Canada, where I'm at today is Toronto, you'll see little shops around, and some of those might even be a customer of ours or of our customers. But from a bank processing point of view, B of A is the dominant provider of banknote services, while Exchange Bank is continuing to take market share. On the global stage, when we're selling dollars or euros or pesos to countries outside of the US and Canada, where we're currently dealing with banks in Switzerland, the United Kingdom, France, Brazil, Mexico, and there's a couple more, and growing. I'm going to be next week in Lisbon, Portugal, hopefully bringing on a new bank. But that's who we compete with there. Money Corp, which is a UK-based company, and of course, Bank of America globally. On the payment side, you're more into the fintechs. So you have this Revolut and the eBuries and the OFXs and Corpays. So we, on the payment side, is a much more competitive marketplace, but we like payments because you're not having to have trucks and vaults and all of that. It's all digital, and hence we compete with banks and non-bank providers. This is just showing you how our revenues continue to grow. You can see the effect of the pandemic there, but you can see that this projection will show us continuing to get over $100 million in revenues, and we plan to do even more over the years ahead. Again, these are the slides that I'm going to have just put on our deck, but basically you can look, we're transparent being a public company, you can look at the history of our company's financials, both the balance sheet and revenues. And this is just showing you the EPS that we've been doing, some of the highlights. And again, I'm more of a talk and just let's, discuss what's on your mind as opposed to trying to read off a page here. So again, I'll post this on our website. This is a great slide to talk about because this is our strategic plan. Every year, right about now, we do our strategic planning for the next 3 years. So we take a 5-year view, but we have a concrete 3-year strategic plan. Currently, our plan is, and it's being reconfirmed on June 17th with our board of directors. And then what happens is based on once we present the updated strategic plan for the 3 years, the board will, of course, give what they call challenge, question this and ask that. And then we build our budget based on that agreed changes to the plan. And then by September, we formalize our next 3-year strategic plan for fiscal 25, 26, and 27. And we have that budget that we're all held tightly to. What is our plan? Our current plan is our core business is servicing banks and credit unions in the U.S. We currently service over 22,000 banking centers represented by over 1,000 banking companies. And in Canada, we have, again, there's not a lot of banks here, so we do have a few banks, 2 of them being exclusive with us. And we will continue both in Canada and the U.S. to focus as our primary revenue generator on banks and credit unions. Here at Exchange Bank, we are focused on global expansion because Exchange Bank has this unique license from the Federal Reserve Bank in New York is where our account is held. But the Fed is keen on keeping liquidity, buying or selling. They don't care which way it goes. They just want to make sure there's never an inability to move the U.S. dollar. That is one reason why it remains the world's reserve currency. We are a part of that process. And so we are selectively growing our business. Our board and I are very conservative. We are currently just doing FATF countries, which a lot of you may not even know what that is. But that basically, FATF, the Financial Action Task Force is what it stands for, but it's a global group of basically all the governments that have agreed on rules that banks should follow across the world, and they've rated them FATF or non-FATF. So US, Canada, Switzerland, UK, big countries like that are FATF, and that's where we're focusing. Non-FATF would bring you into some of the Eastern Europe countries like Czech or Romania and so forth, or some of the countries down south like Costa Rica. We are having a plan for both FATF and non-FATF currently, since our license with the Fed is just over 2 years. We are still focused on the big markets like Eurozone and South America, like Brazil, Mexico are also FATF countries. We do have a very successful consumer offering. I told you we have our stores, 42 retail stores. We have an online store that goes to 90% of the U.S. population. And we have those agents. That's very profitable business because you get the full margin, whereas in wholesale, we're splitting the margin. And so on the consumer side, we are, we're able to get the fee income and all of that when we own our company-owned store. And then the integrations and the payments, this has been our diversification. I'm proud to report that we're already up to about 25-30% of our total revenues coming from digital FX. And we continue to see that as a wise diversification since some think cash is going away, although the last 2 years, cash usage has gone up. And that's been reported by the US government, the Canadian government, the German government, the UK, Australia. Those 5 major markets that we deal with are all reporting cash usage up. Even still, we want to diversify to have more and more revenues from payments, all while we'll continue to always expand our banknote business. And then the last part of our strategic plan, which I'm very proud that we're finally have succeeded in the last year, and there was a big charge off if you do your homework, of about $1.5 million of unreconciled items, all kinds of cleanup that unfortunately had to happen during switching from our old GL system to now Oracle's NetSuite. Oracle NetSuite has been a very positive development for us because it now really gives great reporting. In fact, our group CFO, Gerard, calls it a live dashboard. You literally can see the activity live. And so that fast and accurate data gives management and I the ability to really better run the company and optimize our group's performance. And this is going to go through each of the slides. I want to save time for you guys, but basically this is just reminding you what I just told you. We're focused on expanding banks. We are looking at the big banks. We do service 3 of the top 10 U.S. banks, 2 of which are fully exclusive. Why? Because they want their entire bank system on our software because it keeps them out of trouble. We are servicing smaller banks, of course, but we continue to see our pipelines very full in this market. We have a whole team very experienced in maximizing this. I told you about the global banknotes. That's with the Federal Reserve. And of course, we sell more than dollars. We'll sell pesos and Canadian dollars and other currencies that people need globally. And we are focused on Europe, Mexico, Latin America, as I said. Our consumer market is great. You'll see where we have agents. These are all these airports where, again, we don't pay any rent. The only airport CXI pays rent, has the full business is in our home base of Orlando. We do have the Orlando airport. Right now, we only have 1 desk at the original terminal, but they just opened the new terminal, which is very international, and it's very likely we'll be opening our 2nd desk at the new Terminal C, as it's called. But our focus on expansion is Florida, Hawaii, California, and New York. Those are great markets for us. Of course, Denver's close by. And then our online channel. We hope to eventually be able to ship currency to all states. We have a solid relationship with the largest automobile club in the U.S. And they are in every state, and we are continuing to grow with them. This is what our stores look like. I'm very proud of them. There's the King of Prussia Mall that is nearby our friends in Pennsylvania. That's a brand new location. It was a Travelex store for over 20 years. They went out of business during the pandemic. And again, we had to negotiate a much better rent structure, which we finally did. And so that's our newest booth. That is our 42nd store right there. That's our store, our first original store at the Orlando airport I just told you about. We will be adding another store, most likely, at the new Terminal C. And these are an example of another location in New Jersey. These are the agents. So this is where we're not paying rent or payroll to be at these desks. They still use our brand. They use our licensing. They do use our money. And most importantly, they use, our software. So it's a real, almost like a JV. But it's an agent contract between us, them, and the airport operator as a part of that process. But these are great locations that have been very successful for us and our operators. The bank is the one asset that we are very focused on improving. It currently, this last year, has lost money. And so that has been one of the pressures now. One of the shareholders actually said the bank has put a negative market. It should be at, let's say, $30, but it's trading at 26 Canadian dollars because of the bank. As soon as the bank hits profitability, which we think can happen in the next 6 months, that negative draw will start going positive because then it does have the ability to become another great Canadian bank, which, as you know, the Canadian banks make a lot of money here. It's just a difficult regulatory environment. I already talked about switching our core processing. We've done other things with cyber, all kinds of, we've invested heavily and will continue to invest heavily into our corporate infrastructure. And this basically is just reminding you that we're strong. We have a strong balance sheet. We have good, profitable, reliable earnings. And I think we're pretty much ready for questions now, Adam.
Excellent. Thank you very much. That was a great presentation. Just as a reminder, this will be available on the website, the Currency Exchange website, following this business breakdown or at some point in the near future. A lot of good questions rolling in from the audience. So I'll give it another minute or two to let some questions roll in. And as a reminder, just scroll to the Q&A section on the Zoom and you can type your question, which we'll get to time permitting. I'd love to just start here. You mentioned a lot about kind of the evolution of the business. And I'm wondering if you can talk just about the competitive barriers to entry here, specifically as it relates to the FIBIX license and kind of the process that you had to go through from application to approval and how difficult that was.
Okay, so in both the U.S. and in Canada, to be dealing in money, you're either a bank or you're called a money service business. Every state in the U.S. and of course the country of Canada requires you to become licensed properly and have the infrastructure to get that license to be basically a bank like we are in Canada or a quasi bank like we are in the rest of the U.S. You specifically mentioned the FIBIX program, which stands for Foreign Bank International Cash Services Program. That is you can Google it, everybody. The FIBIX program is a Federal Reserve program. It's eligible to any foreign bank. So first you got to be a bank, and then you got to apply. And even though, let's say, the largest bank in Switzerland recently, because they took over the other largest bank, would reach out to the Fed and say, we're so large, we want to go direct to the US government. To be a participant in FIBIX, your business plan has to show that it's not just for your own bank, but you are going to be distributing, hence the distributor, to other banks, because they want this program is to ensure pure liquidity of the US dollar. And so the process, to answer your question, took about 2 years. And then there's an annual process that they basically audit you. If the Fed themselves don't, we engage someone like a Grant Thornton or KPMG or something that will be. The scope of the audit is dictated by the Federal Reserve, but every year they come in and check you out to make sure you're in compliance with the program and that you are still eligible and properly representing the U.S. government on the global stage. So it's a lengthy process. It took almost 4 years to get our bank license in Canada. And then 2 more years to get the Fed license from the Fed. So the barriers are high enough, and a lot of paper being used to do that, because there's a lot of forms and process to be followed. Did that answer your question?
Excellent, thank you. There is, we might jump around to a little bit here, just given the flow of questions, so bear with me. Can you help quantify sort of the TAM for banknotes? And how do you think about if the usage of cash were to decline moving forward? I know you talked about diversifying the business. The data that I'm seeing is that cash usage is actually increasing, especially internationally, and travel is a secular industry. But what's the sort of TAM for banknotes, and then what's the best way to think about what happens if cash usage declines?
So the size of the total banknote prize is an unknown number, because there's no national or global organization that reports on it. I do know from dealing with, even though we compete with Bank of America, it's a very small industry, and I do know that Bank of America generates probably close to $400 million in banknote revenues. Money Corp over in the UK shows their financials show that they're generating over $100 million. We're close to getting to 100 million ourselves. And so in our world, because again, I'm not talking India, which is another huge banknote market, which one day we may get there sooner than later. But just in our what we see sights on is $500 million of additional revenues that we could take away from Bank of America, Wells Fargo, and Money Corp. And so that's the target size that we're looking at. Now, will that pie shrink? Possibly. We've actually seen since the pandemic, and with the higher interest rates, we have seen cash transactions, because cash is not just travel. Absolutely, Adam. Number one reason we're selling currencies because of travel, but there is still a lot of commercial activity to cash. Like I said, I was just in Brazil, and I was talking to one of the locals, and he himself said, "Yeah, I just sold his kid's car, but he demanded to get paid in cash." What cash? Not Brazilian reais. He wanted US dollars. And because the US dollar is always a strong currency globally, and so cash is used in commercial transactions, especially in some of the smaller markets there. And so we are diversifying because one, it's a natural fit. We're already servicing banks. So if I can do your cash and I can do your wires and clear your checks, it's a natural sell and win-win. It keeps us sticky because then we're doing everything with them. But we do see it as a diversification should cash continue to go down. But we will continue to grow because we're seeing B of A, Bank of America is not focused on growing this business. Wells Fargo also is not as focused on it. This is all we do. And so we can continue to grow successfully to 200 or 250 million in top line revenues from cash, just because we're hungry and ready to take that business. And the big banks, as they get bigger and bigger from their core lending and mortgages and all of that, this business becomes smaller and smaller. And I actually see an M&A opportunity to take control of one if that opportunity were open up. I know one based in Orlando.
Okay, great. Yeah, moving on to another question, North America related. Can you talk a little bit more about the agent agreements that you have in airports and what the best way is to sort of grow that business over time?
Well, again, with the exception of Orlando, we've always stayed away from airports because it's like dealing with another government enterprise, which can be taxing. The agent model has been successful because we found operators that were running the airports prior to the pandemic, and then the parent company that they were operating for went out of business. And so we had this opportunity to help them get back into the airports, with them dealing with the airport authority and us being their supplier, giving them the cash, the licensing, the software, the brand, everything. And then they, of course, know when to go to that gate. And if you recall this is the coolest one. They have it in Newark, they have it in Charlotte. There's a couple places where they actually literally drive their currency exchange to the gate. And so they know how to run it better than we do. But I can't get into the commercial specifics of the agent agreement. But another type of agent, which you may or may not know of, is called Duty Free America. They're a Florida-based duty-free operator. And we have enabled all of their duty-free stores to do currency exchange. And so we see a lot of opportunity with some national retailers to add currency exchange. Just like you can go to go to Walmart and do a Western Union type of transaction, we envision that we can continue to grow our agent model by adding this product to other businesses that are open, let's say 7 days a week, that have a high flow of traffic that could also utilize this. And the benefit, again, is a win-win-win. The shopper at Walmart, let's say, doesn't have to go to the bank anymore. They can do it right where they're shopping. Walmart gets some fee income and some new revenue, and they get foot traffic because people may actually go to the Walmart because they're doing currency exchange. And of course, for us, we get more locations. For us, it's all about transacting locations. Did that answer your question?
That's very helpful. And then in line with the kind of snowballing off of that question from the audience, Bank of Ireland, HSBC, Travelex have exited the North American market, Travelex and airports as well. Why has it been hard to succeed, or is there any sort of thing you can pinpoint in terms of their struggles?
Well, I can speak specifically to Travelex because I know them from the day I first started with currency exchange 35 years ago. Travelex is a global operator. And when the pandemic came, they actually, I don't know if you knew the history of this, but Travelex, before the pandemic started, March 20th of 2020, on New Year's Eve of that March 20th, of the 2020 year, they got captured. They had their entire system got taken down by a computer virus, by a ransomware attack. And they literally were closed from January, February, March. March 1st, they reopened from their cyber attack. And then on the 20th, they closed back down. So they had the 1-2 punch. So they really went down. And when the bondholders who took control of the company, since they defaulted on their notes, they ousted the upper management, brought in some other people in, and recapitalized, predicated on the fact that they will not be in North America. And the reason why is because we had been successfully over the years taking a lot of their market share away from TravelX in North America. And so they operate. We're actually now starting to do business. They source U.S. dollars, and so we're no longer competitors. We're actually trading partners, which is just now starting. And so they left because of their bad history, and then the math showed their toughest market had been North America, primarily because we were taking market share. Bank of Ireland left, as you know, as it's explaining that they melted during the Euro crisis, and they completely left the North America market. They still do have their Bank of Ireland USA in Connecticut, but they completely exited the foreign exchange industry here, and they're not back. So they are still obviously a well-capitalized bank, but they have chosen to focus in their market share because we are the dominant provider here and a competitor for them.
Great, thank you. Moving on, you have previously said your trust accounts for the international business will be up and running, I think around March or April, and the member is asking for an update, or have you begun to complete transactions with the trust account yet?
So the trust account is done. The first bank has done their first trade, but ironically, they didn't even end up using the trust process to ramp up the volumes. They will, but we did. We have onboarded a client that will be utilizing that, and that paves the way for more banks to follow. And for those that don't know what this is all about, the trust account's in place because our bank is very small, and the trading in U.S. dollars is usually large dollar amounts. We actually have some banks that want to trade $30-40 million, which is more than the equity in the Exchange Bank of Canada. And so they want a guarantee from a trust company, which is a multi-billion-dollar trust company, that their funds, we won't go out of business midstream, and so their funds are protected. And so this trust account is now legally finished. Everything's been signed. And we are onboarding right as we speak the first customer who already did their first trade without the trust account being used. It was a smaller trade just to break the ice and make sure the logistics work between their country and ours. But to ramp up so they start doing 20-30 million a week is going to require the trust account. And so that's being operationalized as we speak.
Perfect. And I recognize that Gerhard is not on the call, but there's a question about the cost structure in line with the trust accounts. If there's any color to add about how that might affect things moving forward, that would be helpful to hear. But in terms of
I know the high level, the cost. There's a per transaction, which is pretty much nothing. Let's say $50 or something per trade. But there's an annual fee per client, because each bank gets their own trust account at the trust company, and there's an annual fee. It's again out of respect to the NDA and all of that, but it's a very reasonable number. It's not anything that would deter this business or really eat at our profit margin. Within one or two trades, you paid for the whole year's annual fee, so it's a small type of number like that. So it's a very affordable, reasonable solution for everybody. That's about as much clarity as I could give on it. And I do know the exact number, but I don't know the contract wording. I probably can't say that on a public stage because of respect to that company and who else they may have trust accounts for.
Sure, thank you. Again, I will say Gerhard is not on the call. I would encourage investors to reach out to CXI to speak with him as well. He's great. But continuing on with the cost structure, looks like EBIT has been about flat over the last few quarters, despite revenues growing strongly. This has historically been a business with very good incremental margins. Can you share maybe how you see things evolving moving forward?
Yes, the negative effect on our efficiency ratio has been our bank. and that's why I'm here in Canada, is that we are very focused on growing revenues both domestically in Canada and internationally. And then the cost of this bank, instead of bringing down the overall performance of the group, will start adding to it, and you'll see that big swing. So as I said earlier, we don't really give guidance, but I'm confident that within 6 months the bank will stop sucking off the mothership. I remind you, in 22, the bank did make $2.5 million. And it is just last year, and this year's been a little more challenging because the costs, as you know, with the inflation, everything's gone up. Shipping costs, even fees to be a bank, the regulatory filing fees, everything's way up. And so we are continuing to focus on revenue growth. But that is the biggest reason why our efficiency ratio has been flat. Overall group revenues are up, especially at CXI, but EBC's been behind budget, and costs are more than we had expected, and therefore that's the draw down on it. But that is under laser focus. We have Katie Davis, our CFO of the bank, who's also our group treasurer, has been very active. Her and the managing director and the sales team and I were all have rolled up our sleeves in ensuring that we get the bank profitable and a contributor to our group, and improving our overall return on our capital.
Great, thank you. You talked about restoring Exchange Bank of Canada to profitability. Is there one sort of measure or initiative that you're focused on to do that more than others?
The utilization of the FIBIX program is a key, is probably the fastest and easiest way. However, domestically, we've also been working with financial institutions utilizing the success CXI has of this OPOP model, where we integrate together. And so some of our smaller financial institutions, we have found now, because they use us for cash, will and are willing to do payments with us. The challenge up here is that a percentage, let's say 20% of FX activity is related to cannabis. And so we had to go through a process to make sure that we can handle that high risk part of transactions. And we are now able to do select corporate type of FX payments for cannabis related, as well as, again, for us, we're going to the bank, but some of our banks said we deal with this industry, which at the time, just until recently, we said we couldn't do that business. And so we are seeing growth both domestically and internationally.
Great, thank you. Next question, kind of in line with what I asked. Would it be possible for EBC to build a payments business, kind of like Crown Agents or StoneX in the US, meaning leverage your license and foreign bank relationships to clear major payments directly, which may take advantage of some of the major banks sort of retrenching from correspondent banking business?
Yes, that's what we're doing. Exactly right. That I think I know who wrote that one. Yes, we are active on that. We are familiar with Crown Agents. Crown Agents and us have established a relationship, an interbank trading relationship, and so we enjoy our relationship, and we envy their model, and we are focused on our correspondent relationships that we have and doing more payments. Absolutely, that's what we're trying to do and what are doing.
Okay, excellent. What's the most effective way to grow the corporate payment client base?
Integrations. For example, I don't know if we did a press release or not. It's initially not a material customer, but it sets the pavement for this type of stuff going forward. But there is a domestic payment provider, meaning they've developed an invoicing, payables and receivables software, and they've tied into a local Canadian bank. And that enables, let's say, if I'm the babysitter or I'm the lawnmower, instead of me leaving my bill under your pad, you're going to get a text saying, "Hey, I mowed your yard. You owe me $100, and click here to pay." And so they already have about 300 corporate clients here in Canada that are using that software and that domestic payment capability there. And a lot of them are asking, those corporates are asking, I invoice down into the US all the time. And so I want to do the same thing and be able to do, have someone pay me when they're wanting to pay their bill, they're going to click on it. It's US to Canada. We will be doing that FX. So basically we're having an integration, which is done now, with the software provider so that their customer base can get piped into us. We still have a fleet of about 8 or 10 corporate bankers that literally dial for dollars and call and say, hey, we're a specialist bank, we'll switch to us. That's one by one. And so to accelerate that, we are tying into existing payment flows and having those transactions routed to us, or enabling, like this other customer is enabling a new revenue line because they didn't offer foreign currency payments, they only offered Canadian dollars.
Okay, excellent. We have time for a couple more questions, so maybe 2 more, and then we'll try to wrap it up. The first, have you run into, from a competitive standpoint, have you run into integrated providers being able to bundle their services and offer better FX rates than EBC? Or is that sort of, have you thought about that just in terms of the future of the bank?
So those are called aggregators, and we are familiar with some aggregators. We have yet to have a competitive situation where someone leaves, because the reality of an aggregator situation, they may get a better exchange rate, but our solution is a full service solution where whoever's doing that transaction wants to make sure the money gets credited, wants to make sure that it's compliant and all of that. And so we have yet to come across that. That's usually more on the consumer side, that the aggregators where I'm shopping, I'm going to be buying a flat in London, so I need to know what's my best way to get 50,000 pounds. That's, you know, so those are the big UK fintechs that are talking that language. But our customer base primarily is financial institutions or a larger multinational, and they want a full solution. So while everybody wants the best rate, but again, people use us for the combination of good, in my opinion, one of the best technologies, a good price, and the service, the support and service after the fact. And so that combination is why we're not butting head against the true FX. Here, I got the best rate, but you figure out how to get it over to England. You deal with your own reporting and all of that. And so our target markets don't want that. They want a full solution that enables the transactions, but keeps them compliant, their accounting department, their regulators, everybody comfortable. And that's the winning ticket, is to have good service, good technology, and of course, a reasonable, good price.
Okay, excellent. Let's finish with this question. If you had to choose one important KPI for investors to monitor moving forward, 1 or 2, what would they be?
Well, obviously, the obvious ones, the revenue growth and so forth is critical. I know historically transacting locations has always been a good marker. For example, there's a large financial institution that we could add another 4,000 transacting locations. And so we still like that KPI to understand how many places our software and services in place is one, but that all really ties into the two most important ones. What's your revenues and what's your bottom line? But the cost growth doesn't scare me. We are continuing to invest into the business where we're not getting the return on that investment currently right here in Canada. We are focused on ensuring that we get that return for our shareholders.
Well, thank you, Randolph, for letting us machine gun a bunch of questions at you. You handled them really, really well, and it's great to do this with you. And I appreciate the MicroCap Club community for asking a whole bunch of questions too. I think you asked some good ones. Is there anything that we didn't cover, Randolph, that you think that we should have, or that we should have highlighted?
No, I think this was a thorough interview. Again, I will make sure, if it's not already on the deck, I'll have our IT team upload this deck to our investor tab, so there's a lot of good information in there. all the numbers and so forth. As Adam said, you're always welcome to reach out to Bill Matulis, who's our investor relations manager, who will put you in touch with Gerard, who's better at all the KPIs and the numbers, and or me, because I am very focused on overall strategy and client, getting the big national, multinational accounts that make the big bucks. But the two of us together will be able to answer any questions that we weren't able to get to them today.
Excellent. Well, thanks for joining us. Thanks, Adam, for handling a lot of the questions, and we look forward to following the company's progress. Thank you.
Thank you. Have a good day. Bye.